Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. Today we're going to talk about NAT stock. Yes, that's right, Nordic American Tankers. It's like everyone and their mothers talk about NAT stock, about oil tanker stocks. So here I am. I have to make a video about NAT stock. We're going to talk about the history basically the short history of the whole oil debacle starting back in March till today. If you like what I'm doing, consider subscribing. Give me a thumbs up, it really helps the channel. I'm growing this channel. I have over 100 subscribers now, and I thank each and every one of you. When you give a thumbs up, it helps push my video to other people and helps me grow the channel. Also, check out my other videos and consider subscribing again. Also, if you want to get 2 free stocks, consider signing up for WeBull. I have a link in the description below. You get 2 free stocks if you deposit at least $100. Also, if you want to get 1 free stock, you could try out Robinhood. You get 1 free stock for signing up. All right, here is a oil tanker. It is a NAT oil tanker, Nordic American Tankers. So the whole oil debacle started in March of 2020. So basically, you know, the whole illness 19 situation happened. Basically, all the economy shut down. When the economy shuts down, you know, you're not traveling, you're not using gas, you're not flying. So a lot of oil is just frozen and not being used. So, but the oil production keeps on happening. It takes a lot of time and a lot of effort to shut down oil production. So oil production kept on happening, you know, all over the world, Russia, Middle East, US, oil kept on pumping. The Russians and the Saudis tried to come to an agreement to cut oil productions. That failed. They both weren't able to come to an agreement, and they kept on producing oil. United States also kept on producing oil. So we had an oversupply. Supply and demand, you know, says if there's too much supply, not enough demand, the prices go down. It's just that simple, right? And the prices did. They crashed. So in late April 20th, oil contracts plunged into the negatives. It was going for negative $37.63 a barrel. First time in history oil has ever dipped into the negatives. So the whole timeline of this, you know, situation happened, like I said, beginning in March with the whole oil price war with Saudi Arabia and Russia, and then eventually the oil crashed down to negative numbers, and so it was costing more to pump out the oil and to transport the oil than it was to actually sell the oil. So a lot of, you know, companies were not selling the oil anymore because, you know, no one's buying the oil essentially. But you have to store this stuff. You know, you have to store it in either an oil tanker or on land storage. And so all the land storage was filling up, and so then they had to go to oil tankers. So they're, you know, storing them on these ships, and these ships are just basically picking up the oil and just anchoring themselves off the coast and just sitting there. They're charging like up to $70,000 per day to rent out one of their oil tankers. And, you know, these oil companies are just going to wait until the price of oil goes back up and then sell it for a profit. You know, even though they're paying roughly $70,000 a day for like a 6-month contract to hold this oil, there's roughly $400,000 for 6 months, but they're still going to be able to make tons of money off it when the price of oil goes back up to, like, you know, $50, $60, $70 a barrel. Right now, currently, it's roughly $20-some a barrel. So they just have to sit on it and wait to sell it. You know, the supply is going to go down because OPEC has cut production, the US is cutting production, so there is going to be a flip in the supply and demand, and that is when the oil companies are going to be taking that oil back out of storage and selling it at a profit. So let's go further on with the timeline. So basically, a lot of YouTubers were talking about this in late April. Jeremy from Financial Education was one of the biggest channels that talked about it. He talked about it in April 22nd. A few days later, the CEO of Nordic American Tankers went on Jim Cramer's show and talked about how much money that they're making, you know, how much they're charging per day for their oil tankers, and basically how much money that they're making. He said it's the most money that he's seen. He said the business is the best it's ever been in a long, long time. So that obviously got a lot of people excited about oil tankers, and people started piling in, buying this stock and causing the stock price to shoot up. So we're going to go back to April the 16th, and I want you to look at the volume. So April the 16th, this is NAT stock. The volume was about 3.6 million shares were traded that day, and the price was at about $4. And then the next day, roughly 3 million shares traded, and same price, about $4. Then on April 20th, look at the volume shot up to 17 million shares traded. So that was when oil went into the negatives, went into negative $37 a barrel. And these were the people that were on the ball. These are probably experienced traders that knew when oil is trading this low, something needs to happen. They're going to find places to store it, and land storage was filling up. So people that were on the ball, they automatically jumped to oil tanker stocks. That's why that volume went up to 17 million traded on that day, shooting the stock up to $4.37 on the open. Then the next day, again, look at that volume, 24.93 million shares traded. The price shot up to $5.43 on the open. The next day, YouTube was talking about it. Jeremy from Financial Education put out a video on it. And again, the volume is up to 12 million that day. Then the stock shot up to $5.41. The next day, people are buying heavily. 23 million shares traded that day, and the open price was $5.83. Then on Friday, which was the 24th, the CEO went on Jim Cramer, and look at the volume on that day, 19.9 million shares traded, and the price is up to $5.53 on the open. Then the weekend passed, people kind of digested this, and on opening on Monday, look at that, 63 million shares traded on Monday on the open on the 27th, and the price shot up to $6.54 on the open. And then the next day on Tuesday, 111 million shares traded, and the price went up to $9 for the high. And so on that day, when it hit the highs of $9, people started selling out of the shares. Just think about it. If you had shares at $4 and change on like the 16th or the 17th of April, and then like just less than 2 weeks pass, and you get more than 50% gains on that money, the people took their money and ran with it. And so that's what people are doing. All these people that were on the ball, picking up those shares at under $5, and on all this ramp up happening, then they made their money and they got the heck out of that stock. So then the next day, the price starts falling. Look at the volume, 58 million shares traded place. So basically, these are all the sellers. They're selling out of the stock. Then the next day, 21 million shares. The price drops down to $6. And then today, May 7th, NAT was trading in the upper 4s and lower 5s. I think it closed at roughly $5 and change, $5.10 or something like that. So needless to say, extremely volatile stock. Prices going up and down like crazy. But the fundamentals of the underlying company is still strong. The company is going to make tons and tons of money. They have 6 months contracts at roughly $70,000 per day. The company is going to make tons of money. They're going to pay high dividends, but yet people are fleeing the stock. Why is this? Well, we have to look at who owns the stock. So take a look at this. So roughly more than 60% of the people that hold this stock are individual stakeholders. So that's basically individual investors. If you're watching this channel, you're most likely a individual investor. Just your average Joe picking up some stocks, picking up some shares, trying to trade it the next day or in a few weeks to make some money. So that's why the stock is so volatile. Also with the oil prices going back up steadily, people are kind of getting nervous. Maybe these oil tankers aren't going to be needed, and people are just taking their money, taking their profits and running. So speaking of profits, let's see what their dividends are. So NAT's current dividend yield is roughly 10.67%, and that is an incredible dividend yield. So they just upped their dividend for the second quarter. They're paying 14 cents per share for the second quarter. Keep in mind, they only paid 10 cents total in 2019, and just in this one quarter they're paying 14 cents, so massive dividend jump. Here's a shot of all the tankers that are basically docked around the world. It's incredible just how many oil tankers are just basically docked along the coast, just storing oil until the oil prices go back up. Here's a shot, like dozens of oil tankers have been spotted anchored off of Southern California coast. Like I said, they're just sitting there basically waiting for oil prices to go back up. So am I personally buying NAT stock? So I do have a small position, a very small position. I'm only willing to risk $300. And so I bought in at roughly $6 and change, I think it was last week. Then, you know, the price shot up and there's no way that I was going to buy more at more than $6. I'm not going to try to chase a stock when it's on the uptrend. My philosophy is, you know, when it goes up, I'm going to wait until it comes back down. I'm not going to try to chase a stock that is on its way up. So I basically picked up, I forgot what it was, a few shares, and my average price was $6 and change. But now it dropped down to $5 and, you know, into the $4. So I did add to my position. Like I said, I was only willing to risk $300. And so if that $300, you know, disappears, I'm okay with that. That's my risk tolerance for this particular stock. I'm not very well informed about, you know, commodity stock. You know, technically this is not a commodity. This is a tanker stock, but it deals in a commodity. And I'm not really comfortable with commodity type stocks. So the most I'm willing to risk is $300. So I have already put in my full $300, and there's my price point. Basically $5.81 is my average cost basis. And like I said, I have $300 in NAT stock. Today it went up again to $5.28. So I am currently down to $27. So I'm just going to hold on to it, you know, at least for a few months. Their earnings are coming up. I think it's next week. NAT is going to report on their earnings. I don't think the price of the stock is going to move that much. You know, we all know how much they're making, so it's not like it's going to be any news. So the price of the stock is not probably going to move too much after the earnings, but you know, I'll hold on to it for a little bit, collect some dividends, and we'll see where the stock price goes. If it goes back up to, you know, $9, $10, I'll definitely sell it and take my profits and run. If it drops down, you know, into the $3, I'm just going to hold on to it and see what happens. All right, guys, that's my video. Thank you for watching. If you like what I'm doing, consider subscribing, give a thumbs up. It really helps the channel. Leave some comments below. I read all your comments. Let me know if you're investing in any oil tanker stocks. Let me know if you're holding, you're selling, you're buying, what you're doing with your oil tanker stocks. Give a thumbs up, really helps out the channel. Check out my other videos, and I'll catch you in the next one. Peace.